Now, the company that I'm going to talk about is a company in the pharmaceutical business with offices or presence across India, Japan, London, US, and Canada. Uh, Obviously, it has a long history of growth, some of which are organic and some of which are inorganic through acquisitions. They operate in what is called a very exciting space called CDMO. Why do I call this space exciting? CDMO is an interesting space which stands for contract development and manufacturing. As you can imagine, 25 years back, many of the Fortune 500 pharma companies used to outsource their core R&D part of the drug development to scientists in the East. And the core aspect of why this happened was the scientists in the US, there was a significant cost arbitrage between that and what was available in perhaps a China or in India. That resulted in creation of some of the largest market cap companies today in what is well known to be a global company called Wuxi Pharmaceuticals, based out of China, which is in excess, generates in excess of $6 billion in terms of top line. India has been one of the next beneficiaries of this particular space's evolvement. And the market itself has continued to grow at in excess of high single digits globally. What is interesting is India's market share as we speak is still 3% of the global CRO market. So clearly the space is underpenetrated. It also is important to understand that it's not easy for a company to set up. This requires very deep scientific experience. And even if you crack that, you then have to evolve full-fledged into manufacturing, which means post the service aspect, you then evolve into a significant capex that not many companies can invest behind. So this inherently creates a lot of stickiness. And hence, once you find what is called a certain company which has reached its inflection point, a lot of interesting things can happen, which we will discuss. History of the company, like I mentioned, has had its history as an acquisition by Nicholas Laboratories in 1988. It renamed itself as Piramal Healthcare in 2010, demerged itself from the parent company called Piramal Enterprises into an independent company called Piramal Pharma. Today, Piramal Pharma is managed by the daughter of the Piramal Group. Her name is Nandini Piramal, along with her husband, Peter D. Young. So it's a separately run company, separately managed company from the conglomerate, which is the Piramal Group that many people might be aware of. Interestingly enough, Carlyle had invested in the company, valuing roughly around $490 million, 20% stake valued at an enterprise value of around $2.7 billion. Today, the company's market cap would be slightly in excess of $3 to $3.2 billion. So over the last 3-4 years, a lot has happened, and we'll cover some of the interesting aspects over the next few slides. I will briefly touched upon the management and the individuals who are behind the firm. The business has 3 core segments. CDMO, which is what we are betting on, which is the 13th largest globally. In terms of the revenues, out of the total 9,000 plus crores, slightly short of, let's call it 8,000 plus crores in FY25, which is how they will end. 4,750 crores, which is what is 47.5 billion, comes from the CDMO business. They also have a fairly interesting complex hospital generics business. And they also have the Indian consumer healthcare business, which is branded, which roughly contributes to around 12% of their revenue. If you look at Piramal Pharma's growth over the last 14 plus years, you will see that the company has compounded its top line at a steady 14% CAGR over time.